Hey there, traders. This is the weekend wrap. We're going to take a look at what we have heading into the new weeks, the setups, and so forth. Let's start off right now and look at the Euro USD. You can see this pair, after basically a snooze fest for the last 9 days, has broken higher. It's pushed above this initial resistance zone, which was around the 137.70 area, and now is testing the top of a larger range that you can see has acted as a resistance zone also between 138.30 and 137.40. And then on top of that, on the weekly chart, if we go back all the way about 5 years, you can see there's an ascending trend line that marches down lower right there that is intersecting the cross at right around the 139 level. So still at this point, you can see that the cross has broken out of this very tight congestive range that it was in between 136.85 and 137.70, but the conviction to the top side still is limited, as we do have multiple levels of resistance right here at 138.30 and 139. I mean, to be all honest with you, I would not be comfortable. You could go long here on maybe a pullback towards the 136.70 level, looking for, excuse me, the 137.70 level, looking for a pushback up to the 139, and maybe we even get a break of that. But at this point, I wouldn't mind seeing a push lower. But it doesn't look like we're going to get that in the short term, and we'll have to keep our eyes on the cards. So all I'm just pointing out is that there's a lot of resistance right here, right up in this area. So any trading through or above this level has lots of barriers that it will have to overcome. And the Swiss franc, same thing inversely. You can see that this pair has pushed back down. It is testing this 189, 188 level. This level has been a real bear for the cross. You can see it's bounced off it multiple times. The first level actually of real resistance was 189.25, with the pair poked below, but now we're back testing this, and this is year-to-date lows. If we get a break of this, then we could see a push all the way down to the 185 level, and the 185 level just represents this spike lower that happened all the way in 2011. That would be the first major level of first level, 185.70, 185 level. We can see we have a bit of a zone there that we'd have to keep our eyes on. So that is what we're watching in that course. Now the Great Britain USD, on the other hand, managed to break out of this resistance zone that had been boring us all to sleep between 166 and 166.70, popped higher. That 166, 166.70 level has acted as resistance, but the pair has not been able to. The pair retreated for most of the week, but then has not had the ability to break through, and now we're pushing back up higher. So basically, to push the cross back up to the top side, there's going to be a lot of resistance right here at this 168.20 level. And that's what I'm going to be keeping my eye on. If we get a break of this 165.85, and by a break, of course, I mean like a strong daily close below that level, could look to scale into that position, looking to a push down to the 162.50, 163.10 level, break of the 168.20. We could look for a move up to the 170 level in the short term. The Aussie USD. This guy has fallen asleep on us. You can see these incredible narrow ranges going back. I mean, geez, almost like 3 weeks now. I still have the same longer opinion on this. As long as the pair is below this 91 level, looking for a continued push down lower to this 0.272, 0.8382 level, the 0.272 fib extension. I feel as though I favor that move. Now, I will invalidate this move if we break above this 91 level. Then we could see just continued push higher, in the cross. But as long as we're below this 91, I favor a push down lower. And the yen's a similar story. This pair has consolidated like a beast between 103, 103.50, 101, 101.60, and it came back, tested the 50 fib from the larger move higher from the move higher from the 96.70 level, and now consolidation has been the game. I would expect that if we get a push in this pair back towards this the 50 fib level at 101, we could see a exaggerated move up towards the 108. 107, actually 85 level. That's what I'm going to be watching for in that cross, to see if we can get a bounce off this level and a continued push higher. It would take a move back below this 101 level to really indicate that outlook. And you can see that this pair multiple times has moved down to this 101 level and has found willing buyers at that level, pushing the pair higher over the last few weeks. We can see we have 1, 2, 3, and now it looks like a fourth today. The New Zealand USD. you can see this cross very interestingly, just updated this on the blog, is back in this resistance zone between 84.30 and 84. Now take a break of this level, and then if we get that, we could see a push back up to the 85.40, but we can just see that this pair has come up here 1, 2, 3, 4 times. So we're going to have to watch this in the short term, see if we get any reversal signals. Then we could play for the pair for a book that push down to the 82.50. 82 area. Get to break that though, we get the move higher to 84.50. Just other pairs of interest. Let's take a look at the Great Britain JPY, just because this pair has broken higher, but it's right here, right now at descending trend line support. So we're going to see if we get a break or hold of this level. If we get a break above, we could see a push rather quickly. I would bet to that 174.80, 175 level. If we get a hold here, then we could just fall back in the range, and there will be nothing to look at. Just keep your head forward. Don't cause a stir. The Great Britain Oz, it's been testing this 50 fib all week. I mean, for the last 2 weeks, sitting here. We had the move higher to 191.85, pushed back down to 182.50. Then we just settled here. Yeah, it looks like we finally might get. Actually, I'm not going to say that. We'll have to wait till we see the close here on the daily, because it looked like we were getting a break of it yesterday. And if we do, that could open up the pair for another continued move higher. I mean, I don't know if it's going to go all the way back up to the 91.85. First next level I would look at would be the 0.68 from on that same exact fib extension, and that would get you right where it is right now, 187.70. So 187. Let's see, what is that level? 187.50. Oh, actually, it looks like it's 187.37. So it's interesting. The pair is definitely just bouncing between the fibs right here. It's pretty technical, and it has been rather smooth selling. All right, so in all these crosses, the euro, just watching this resistance zone charts on the blog, you can take a look. Swiss franc, same thing. This 84, 84.30. Ultimately, the 89, excuse me, the 89, 88 level is key, and we're going to be watching that to see if we get a break or hold of this level. The Great Britain's just still in this range, and we have strong support at 168.20. I have strong resistance at 168.20. We get a break of that at 170. Down below 168.35. Oz favoring a move down to 83.40. New Zealand favoring a push move. I mean, USDJPY 108, and in New Zealand, just watching this 84.30 level. All right, all the blogs are on the chart. All the charts are on the blog, and if you want to sign up today, you can get access to the fire trades, stacker trades, and see everything I'm doing in real time, and get education and currency watch, so forth. Sign up today. You can be in for next week. All right, everybody, have a good weekend.